You found a house that's $200,000 cheaper than your city. Congrats. But here's the catch. The monthly insurance can erase every dollar you think you're saving. In the next few minutes, we're touring 12 affordable hotspots that quietly punish your budget the second you hit bind policy. We'll show how risk rating, storms, traffic, and claim frequency flip the math, where the mortgage looks tiny but the premiums flex hard. By the end, you'll know exactly which places turn cheap into a trap and how to verify costs before you fall in love with a listing. Number 1, Miami, Florida. Miami looks like a cheat code. Pastel bungalows, no state income tax, median price that doesn't make your eyes water. You're already mapping beach commutes. But here's the catch. Carriers keep pulling back and re-rating. Flood plus wind plus rising replacement costs turn the premium into a second rent. Risk rating 2.0 style flood pricing looks at elevation, distance to water, and claims history. So 2 blocks can mean 2 different bills. Windstorm deductibles are a percentage of home value, not a flat fee. On a $500,000 place, 2% is 10 grand. Let that sink in. Auto isn't friendly either. Dense traffic, theft hotspots, and congestion push rates. Private insurers exit. Citizens becomes the backstop, and after heavy seasons, those surcharges land. Number 2, Fort Lauderdale, Florida. Broward feels like the loophole. Same beaches, less sticker shock than Miami. You're thinking, easy win. But here's the catch. Wind deductibles aren't flat. They're a percentage. So that affordable $300,000 house, a 2% hurricane deductible means you cut a $6,000 check before the policy pays a dime. And after an ugly storm season, base premiums creep up while carriers tack on roof age surcharges like it's a subscription you forgot to cancel. Slide north to where retirees flock for quiet and pay for it anyway. Number 3, West Palm Beach, Florida. West Palm sells you serenity. Palms, golf carts to brunch. Median price that looks friendlier than Miami. You exhale. But here's the catch. After the welcome inspection, a private carrier can non-renew and punt you to citizens. Old electrical panels, polybutylene plumbing, or a roof past its comfort age? That's a red flag. Citizens keeps you insured, but after a major event, expect assessments stacked on your bill. Reinsurance spikes filter straight into rates too. Quiet until it isn't. Let's leave Florida's Atlantic side and see how the Gulf plays this game. Number 4, New Orleans, LA. A $300,000 shotgun 2 blocks from a po' boy spot feels like you hacked the city. Porch, beads, brass band down the street. You're in, but here's the catch. Flood risk here is real. Post-Katrina codes, elevation, and NFIP reforms push premiums up if your slab sits low. Elevation certificates versus base flood elevation decide your number. Miss it by a foot? Pay like you drive a luxury lease. Wind coverage brings percentage deductibles, and after carrier exits, the state pool fills the gap, at a cost. Number 5, Tampa, Florida. Tampa sells calm, the Gulf cousin with cooler median prices. Feels safe. But here's the catch. Storm surge modeling plus a couple near misses made reinsurers reprice risk, and carriers shoved that straight into renewals. Live near Tampa Bay at low elevation and your premium jumps. Move a few feet up and it softens, but not by much. Builders' material spikes push coverage A higher, so even the same house costs more to insure next year. Auto isn't helping. Rapid growth means more cars, more crashes, more payouts. Hip roofs and secondary water resistance shave something, but they don't cancel surge risk. Number 6, St. Petersburg, Florida. St. Petersburg hits you fast. Artsy, walkable, cute bungalows under $400,000. Coffee, murals, Saturday market. You're in love. But here's the catch. That older roof is a toll booth. carriers draw hard lines on shingle age, often 10 to 15 years, so a cheap house needs a fresh roof before they'll bind. 4-point and roof inspections flag granule loss, lifted shingles, soft decking. Suddenly you're staring at a $15,000 replacement just to get a policy. Number 7, Jacksonville, Florida. But here's the catch. Sprawl means longer drives, more fender benders, higher auto premiums. The more miles you rack up on I-95 and the Beltway maze, the more exposure you buy. Coastal zips still stack wind and flood riders, while inland neighborhoods near the St. John's pick up riverine flood risk, especially when a nor'easter stalls and backs water into creeks. Insurer rate filings point to rising claim frequency and severity. Telematics and safe driver discounts shave a bit, not a lot. So the couple hundred you saved on mortgage? Auto plus wind eats it. In Jax, highways tax harder than hurricanes. Now we leave Florida for a different beast. Texas scale risk. Number 8, Houston, Texas. No state income tax, endless new builds, and builders tossing closing cost credits like candy. Houston feels like a cheat code. But here's the catch. Houston floods. Not just along the bayous. Pluvial flooding hits blocks far from mapped FEMA zones. After Harvey, underwriting in Harris County hardened. Elevation on piers beats a low slab, and private flood becomes the add-on you didn't budget. Wind and hail ride shotgun, so percentage deductibles show up fast. Number 9, Baton Rouge, LA. You move inland from New Orleans and expect cheaper risk. Baton Rouge smiles, then hands you a bill. Here's the thing. Rivers and bayous flood, storms rip shingles, and premiums climb while wages lag. Auto sits near the top nationally, thanks to crash frequency and a rough liability climate. Let that sink in. Underwriters still grade you on the 2016 floods. Files got thicker, thresholds tighter, and carriers pulled back, pushing more people toward the state plan. NFIP flood sticks around because private flood won't always touch lower-lying blocks, and when it does, the rate gap keeps shrinking. Number 10, Lafayette, Louisiana. Smaller city, smaller price tag. Zillow says you're winning. You're already shopping for crawfish pots and a riding mower. But here's the catch. Lafayette stacks perils like a Dagwood sandwich. Spring convective storms bring hail and wind, late summer drags in tropical systems, and the bayous overflow when rain stalls. Underwriting zeroes in on roof age. A tired shingle roof nukes eligibility, and replacement costs climbed, so the same square footage buys a higher premium. Number 11, Colorado Springs, Colorado. Clean air, mountain views, a mortgage that doesn't bully you. Colorado Springs feels sane. You start planning weekend hikes and smugly low payments. But here's the catch. Hail season turns roofs, siding, and cars into a deductible lottery. Along the Front Range, storms hit often enough that insurers shifted playbooks. Cosmetic damage exclusions pop up, and wind/hail deductibles jump from flat fees to percentages. Some policies pay actual cash value on older roofs, not full replacement, so you eat depreciation before the first shingle lands. Number 12, Omaha, Nebraska. Omaha looks like a safe, boring steal. Low crime, steady jobs, friendly prices. You think you cracked the code. But here's the catch. Spring brings clusters of severe storms that chew through roofs. Wind and hail claims keep a floor under homeowners' premiums, and deer hits plus hail dings push auto up. Live near the Missouri or in mapped zones and your lender can require flood on top of it. Let's break it down. Coverage A creeps higher because reconstruction costs climbed. Labor, shingles, siding. So even if sale prices feel modest, replacement values jump. Many policies carry wind/hail deductibles as a flat $1,000 to $2,500, or percentage tiers on pricier homes. Auto rates track weather claims and parts inflation. Not a Florida shock, but enough to mute the so cheap buzz. Even the Heartland has a storm fee. Now let's wrap this list and lock in how to dodge the trap next time.